Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 4:28 in the a.m. Eastern Standard Time, 5:02. I can't believe I just said that. It's still early. First cup of coffee. All right, it is 4:28. I'll try that again. 4:28, 2020, 5:02 in the a.m. Eastern Standard Time. All right, big day today. We have Alphabet earnings after hours. We'll take a look at that chart and see how we close. It really hasn't performed like the other FANG names have. It's underperformed, no doubt about it. But the market as a whole, when I went to bed last night, the markets were down, let's just say on average, across the small caps and the large caps, around a half percentage point, maybe a little bit less. But they have since rebounded, and now they're up, at least on the NASDAQ 100, which is the triple Qs. They are up around a half percentage point. And it looks, hey, Pat, good morning to you. And it looks as though they are about to break out. And it's no great shock, because when you take a look at this chart here, you have the potential for an inverted head and shoulders setup. Left shoulder, head, right shoulder. And here's a neckline up here. I have an alert set slightly above that neckline. So we'll see what happens here, but I get the feeling, and this is the feeling I've had for several days now, that they're going to rally these stocks into earnings. Roy, good morning. How you doing, sir? Let's go over to the E-minis. Very similar setup here. Performing slightly worse. Not, let me rephrase that. Performing not as well, but good enough versus the NASDAQ 100, up over a third of a percentage point. And again, same deal here. Left shoulder, head, right shoulder. We're breaking out. The Dow. And these are 4-hour charts. These are all before-hour charts. The Dow is already broken out. So again, left shoulder, head, right shoulder. We have broken out. Here's the neckline. Jeff Gundlach was out yesterday. He was talking about how he's shorting the market. We covered a portion of our short last Friday. Went long. Booked those profits yesterday. And perhaps a little bit too soon. But we did rally. We were long of the TNA, which is the leveraged ETF, putting long of the small caps. And we rallied up and into the 50-day moving average, which is declining. And we booked profits there. So we'll see what happens. We may have to re-enter the long side. But I want to stay short currently of the market until we get earnings that are out. It's only a couple of more days to go. A little bit more pain. We did not get overly short the market, so it's certainly manageable. And we'll see whether or not we fade. We're looking for a reversal day. Good morning, Roderick. Yeah, the tankers. I was listening to Pat just put a note in there. Tankers are on some ride. I was listening to an interview with Kramer and the CEO of Nordic American Tanker. He says business has never been better. Never better. All they need to do is set ships off the coast, and they're good to go. Okay, so Dow looking good. Let's take a look at the small caps. which were getting hit. They were down nearly a percentage point only a few hours ago. And now they are up slightly. And they've broken out. So we had resistance here. We broke out yesterday, pulled back to the retest. Now it appears as though what we're going to do is break out yet again. And why not? Over 20 million people out of work. Going to get worse. Tons of debt. But that's what's fueling this rally. New all-time highs soon. Why not? Let's take a look at the dollar. The dollar got hit. We're down below the 100 mark on the Dixie. Perhaps we're entering a trading range here, but at some point in time, the dollar is going to go. And I get the feeling that when it's going to go is after the economy begins to open up and you have people out there spending again. Yet the problem is they're chasing too few goods. And what will that mean? Consumer inflation. And that will hurt the dollar. And there's not much that Fed printing is going to be able to do about that except make it worse. So the dollar under a bit of pressure here. Gold down over a half percentage point this morning. We're off the lows in a trading range. We do have a lower high here. I have this lower band in red here, watching for a potential break on gold. I'm not going to be surprised because at current, and we've been steadfast in this, we believe that we're in a temporary deflationary cycle. And it'll continue as long as this economy stays closed. Silver. Silver down just shy of a percentage point. Let's start anew here. Let's clean this up. We booked profits on silver a couple of weeks ago. And it hasn't done much since that time. So we're beginning to enter the apex of a wedge formation. Where sooner or later, we're going to come to that down to that 4-hour bar where we either break out or break down, one of the two. Okay, there we go. All right, so watching RSI, no divergences here. So we'll look for a breakout on RSI probably first, then a breakout on price. But a nice consolidation here on silver. So we'll be looking to re-enter on a breakout though. The VIX continues to drop. Bonds. The 10-year popped up higher yesterday. Let's go to the 10-year. And when I say it popped up, I mean the 10-year yield. And we continue to weaken on the bond this morning. That means we're seeing pressure to the upside on yields. Still very low historically. We do have the Fed meeting tomorrow. Actually begins today, and they announce tomorrow. Yeah, we've broken down here on the 10-year 4-hour chart. I'll zoom in a second. All right, so we broke down right here. Yesterday afternoon, attempted to rally back, failed. Now they're going to try to rally it yet again. We'll see what happens. But yields on the rise yet again. Will May and go away be important this year? That saying really hasn't been all that important in a number of years. It used to have some relevance. I think it's a fairly outdated saying, and I think it's only due to the influence of the Federal Reserve on the overall markets. You know, you used to have a seasonality factor. Now, every month is a Fed month. It's ridiculous. So keep an eye on bond prices. And that could influence gold in particular. If you see yields rallying, bonds pulling back, that's not going to bode well for gold. Check out Bitcoin. Bitcoin up at 77.70. It was up earlier, now down. A little bit overbought here. I want to check out the pre-market activity of some of the FANG names. Google appears down. Basically unchanged, I would say. Microsoft up. Apple, which is not a FANG name per se, singular. If you add the second A, then it's a FANG name. Apple attempting to break out here. I believe they cut production by 20%. The shares took it on the chin, then they rallied back. Okay, so Apple looking okay. Facebook, that's my developer, my new one, giving me a lot of bad news, costing me a lot of money. All right, so Facebook limping up in the pre-market. Trip Qs. Flirting with a breakout here. We already knew that. And we'll leave off with Amazon. Amazon had a rough day yesterday, but they're limping back this morning. So we remain in rally mode. One chart I want to take a look at is Virgin Galactic. Pat, you said that there was some BS news on Galactic yesterday? We go to the news. Virgin Galactic. Oh, they're reporting earnings on Friday? I don't want to buy in front of earnings. All right. All right. I'm looking to re-enter this trade. We were long. We booked profits overnight, after hours, I should say. We broke out on a 4-hour basis, but this is on very, very thin volume. All right. Well, not really. About 20,000 shares somebody came in with and bid the shares up. Let's see how they perform. I'm not a big believer in buying stocks into earnings. I really don't know what the earnings expectations are for a stock like this. So I may be reading too much into an earnings report. But it's just simply something I don't like to do, is buying a stock. Unless it's at extreme overbought, I'll short it, or extreme oversold levels, I'll buy it in advance of earnings. But that's certainly not the case here. Roderick, prices are rising because sellers are gone. Low volume leads to higher prices until buyers are exhausted. The Fed, buyer of last resort. Can't argue with that. That I cannot argue with. People are afraid to short the market. There are plenty of people out there who want to short the market. They're just simply afraid to. I want to take a look at uranium. This is a trade that we're going to be eyeballing very, very closely as we proceed into the new trading month. Well, Roderick just put a comment in the chat box. I think this rally is fake, but when to pull the trigger. The market will, they'll send us a signal. And it'll look just like this. Outside reversal day, a bearish reversal day. That's what we're looking for. That'll be our signal. A break below support, ideally the 20-period moving average, which we're extended beyond at current. Even during, you think about this, even during normal times, prior to the CCP virus and all this ridiculous quantitative easing, bond buying, when you take a look at the technicals on the trip Qs, you look at how far extended we are from the 20-period moving average, and for that matter, the 50-day moving average. We're extended pretty far relative to even periods where you don't have as much fear in the markets. Remember, we have VIX above 30 still, even this morning. Now, what the market could be telling us here is that, while we don't have net selling per se, what the market could be saying to us at current is that while it's great that, and I called this over the weekend, or actually last Friday, we booked profits on, not booked profits, we lightened up on our short trade when we saw this occur. Oops, wrong chart. Here we go. So here are the trip Qs. We broke out on Friday. That led us to lighten up about a third of our short position. And we actually went long of the small caps because we expected a rotation out of the large caps into small caps and perhaps financials. That play is still what I believe is going to happen here. And yesterday, despite the fact that we broke out on extremely light volume. And we closed off the highs of the session. So what they're going to do again today, they're going to gap it up. I think they're going to gap it up and rally it up to the 219 level, perhaps a little bit beyond 219.11, 219.50, and then we'll see what happens. Especially after we get the big tech names reporting earnings. But right now, it just doesn't make sense to fight this market to the short side. You know, taking a look at the Russell, look at this, higher low, double bottom setup on Stokes, RSI rising. They're going to squeeze all the shorts in the small caps, even the banks. How was volume yesterday? Volume was okay. It was pretty good relative to the pre-crisis events. Taking a look at the banks, I think they're going to rally the banks. That's a weekly chart. Look at the breakout. There you have it. Moving up higher. Now what we want to watch here are these Stokes. They're down below the 50 mark. Let's see whether or not we double bottom out and then break out. But RSI is implying that's probably what's going to happen. Now, taking a look at, let's bring up some of the names that are reporting this week to see whether or not we're seeing any divergences, any reason whatsoever that were we long, should we be concerned? Now, I'll tell you, the price action yesterday on Google was not wonderful. I mean, this is a bearish reversal bar. They rallied it higher to reverse it. But in this market, you're seeing nothing but acrobatics out of these stocks. You know, candlesticks like this, normally in a normal market, you would expect to see a continuation move lower. But given the Federal Reserve just completely distorting prices, asset prices, you know, what used to work is not working. It's like learning a whole new set of technical analysis. So that's why we're just trying to be deliberate. When in doubt, be patient, do nothing. And honestly, we haven't been trading all that much. So 1,300 is the mark to watch on Google. And you can see they tried to rally it out, break it out yesterday out of this triangle formation, and it failed. Volume was below average. MACD histogram losing momentum. Let's bring up, Netflix, Intel were given a pass. Yeah, there's no doubt about it. I mean, you bring up Intel. I mean, their earnings were okay, but their forward-looking guidance was horrible. Where are my Bollinger Bands? So what we're looking for here on Intel, and this is a stock we're watching, not the short, but it's already reported earnings, so it's like a canary in the coal mine. It's broken out. They broke it out yesterday, ever so slightly, but it's a breakout. But I will point this out. Stokes are losing momentum. Let's watch for a potential move lower here. Only a potential, though. We broke out. Odds favor longs on Intel. Netflix. Now, Netflix, let's face it, it's a Corona stock. It's benefited, it's benefited from, unintendedly, of course, from the virus. But it looks as though we're consolidating here. And we may just break out with the rest of the market. Down volume, declined yesterday, very light volume yesterday. So I'm not going to be the least bit surprised to see Netflix negate this bearish reversal bar yesterday and then proceed higher. Let's take a look at Microsoft. Microsoft had pretty bearish price action yesterday. They tried to break it out, and it was rejected, just like Google, Alphabet. Stokes are losing a bit of momentum here. So it's going to be interesting. As they spike these stocks up, how do they close? I mean, what they're doing this morning is exactly what they did yesterday, only to see a reversal on the day. Roderick, HSTZ, is that Hertz? No, I'm not sure what that symbol is. All right. Let's talk about uranium. Uranium is looking really good. STZ, gotcha. We'll take a look at that. Here's a monthly chart, a big reversal month, an outside month. We're right at resistance. I can't pull the trigger here, and there are a bunch of good names out there that we're eyeballing as potential longs. Here's a weekly chart. We're right up and into resistance. We did recapture the 50-period moving average on a weekly basis. Can it move up higher? Sure, but a little bit too much risk at this point. And we have recovered almost all the losses from the sell-off. And it looks as though we're probably going to move higher here. I mean, this is one heck of a reversal month. Oh, you know what I forgot to go over is oil. Oil was getting clubbed overnight. Where is oil? I want to go with light sweet crude. Here we go. Yeah, it's bounced back from its lows. We may just put in here a higher low. Let's get rid of this. All right, so they're probably going to rally oil in the coming days with the help of our Federal Reserve. You know, Roderick, when you got to be careful. You know, you have a lot of people that are short of oil right now, and they can orchestrate a short covering rally, which would make you think that oil is back from the dead. Remember that it's an election year. So what appears to be logical, and in normal times, I would agree with you. During a time like this, it's an artificial economy. It's not real. So we need to be careful of getting married or wed to any one logical idea. You know, right now, should the markets be back where they are right now with over 20 million people in a few short weeks out of work? Of course not. The talking heads on CNBC always talk about how this is a consumer economy. Well, there's no consumer, yet the stock market is rallying. So, you know, just like they said in The Big Short, that one kid saying 1 and 1 equals fish, and that's exactly what we're in right now. All right, let's go take a look at Oxy. All right, I'm going to leave off with this one. Looks good. I would take a look at the short interest here. But you have your Stokes rising, RSI rising. We're right at a breakout point. If I'm right and they try to orchestrate a short squeeze in oil to give the illusion of a market that's in recovery, then you should see Oxy rally along with it. Hey, Blockchain, how you been, man? Blockchain, that's an outstanding question. I'll say this. I'm learning an entirely different game at current. And I'll bring you back to a couple of trading days where traditionally you would have expected to see follow through, and we didn't. And I think what we need to do is pull back away from simply using daily charts and forget about intraday charts. You know, this down day here, extremely bearish day. This is when oil collapsed. What happened the following day? We gapped up higher to a new daily high. And this is when I was convinced. I saw this price action and I said, man, don't be wed to any one technical idea. Keep a very, very open mind. So what I'm deferring more to is, rather than relying on daily charts, I'm deferring more to where the big boys are and where the markets have to get through to proceed higher. And the 219 mark, give or take a couple of dimes on the trip Qs, is one of those levels. Here, let's just redo this. And we may even head up here for an extreme trade up to 224. You know, you got to keep an open mind here. Maybe we're going to fill the gap at 229. Who knows? Who knows? But the markets will let us know. If we break out and above this resistance level, close there and break back down next week, potential bull trap, maybe we'll get a sell-off. But at current, you have a valid point. You have a valid point. So I'm watching more the higher level view charts for resistance levels to add at. And here's the chart that concerns me. You know, outside reversal month. Think about this. We have an outside reversal month on the trip Qs. Good morning, Tommy. And if we close where we're trading at current or better, this is one bullish chart. And logic would dictate that how could this be possible? How is it possible that we have the triple Qs which are threatening a breakout here? So I'm not wed to any one idea right now. Long story short, because it's not a real market. Tommy, how about the Dow, Bob? It broke out. Dow broke out, at least on a 4-hour basis. Here's the Dow. So here's your inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline. We're rallying. New York Jets, Florida. Good morning, Bob. Long-term Yang. Be careful of that trade, because Yang is going to trade with the overall stock market in the United States. I agree with you longer term that China is going to take it on the chin in a very, very big way. The arrogance coming out of these people is just incredible. And I don't mean the citizens. I mean the Chinese Communist Party. And they will pay a severe price for what they did here. But at current, the reality is that Yang is trading inversely of the U.S. stock market. So just be careful about being wed to that trade, because I'm getting ready I have a small position in Yang. I'm getting ready to lighten up on it at current. I just don't want to keep fighting the market. This is not the market that we had only a few short months ago. Not that wasn't manipulated. But this is just something. This is a whole new playbook. Oh yeah, perhaps later on Yang. Yeah, no doubt about it. I think as when the market here in the States goes, Yang is going along with it. Perhaps sooner if you start hearing talks of sanctions and more trade wars with the Chinese. But that's not going to happen until after the election. Good morning, Russ. All right, with that, folks, I'm going to say everybody have a profitable trading day, and I will talk to you soon. Be well.